Hello and welcome to the Decrypting Crypto podcast. It is July 2025, and this is Off-Chain, your weekly recap of the biggest stories in the crypto space. As always, we're live streaming again. I'm with Austin. Austin, how you doing?
Hey, Crypto Week. We made it, man.
We made it. We made it. By hook or by crook, we're there. Yeah, we got a lot to talk about. I mean, first of all, ETH did something. That's pretty special.
Wow, right? I know, it's amazing. I thought the day would never come.
You and me both, Austin. You and me both.
Yeah.
I mean, what are we at right now? Let's bring up
Like
this,
34, close to 3,400, I think.
Oh yeah, let's have a look.
Taking a little bit of a dip the last few minutes, but I mean, gosh, that's like a...
It's because of my victory lap.
Yeah. As soon as we went live, it started to tank.
Exactly.
But yeah, I mean, we're looking at a rally over the week of like, 25, 29%, something like that, which is...
It's been pretty special. And
yeah,
I think what's like exciting here, I mean, like 1 week we were down at 2,800, and now we're kind of like we've been teasing at 3,500. I mean, looking even at like the 1 month here, like it's pretty phenomenal. Like it's really phenomenal growth that we're seeing in ETH. And what I think's really interesting is that we're kind of starting to finally see movements outside of BTC, because kind of coming into Crypto Week, which we're going to talk about. And if you don't know what Crypto Week is, we'll explain. But you're living it right now, FYI. Is, Bitcoin rallied up to 122K, in and around that. We pushed past 120K coming into the start of this week. And but the beautiful thing has been now we've seen most altcoins kind of follow. And as Bitcoin has kind of retraced, the ETH BTC chart is looking very nice for the first time in a very, very long time. It's got me feeling optimistic, Austin. Alt season is coming.
Yeah. I know, it does seem like altcoin season. It's like, and what's interesting is it looks like capital is actually shifting from Bitcoin to alts. And really, like,
time, really.
Yeah. And even with Bitcoin up, in the 120 range, ETH still significantly outperformed it. So
I think on the 24-hour, ETH's up about 10%. BTC, I think, is actually down a few bips.
Yeah.
So
yeah, it is.
Yeah. And I mean, memes, alts, most other stuff has risen in tandem-ish with ETH. So that's a very good sign. And why do we talk about ETH? It's not because I'm an eternal bag holder of ETH, but ETH rallying, if you hold anything other than Bitcoin, ETH rallying is a good thing for your bags. It's generally a signal of some capital rotation into the wider crypto ecosystem. So it should be a good thing. And speaking of capital going into the wider ecosystem, we had a pretty big ICO. Haven't said that word in a while.
Wow. How long? My goodness.
I know. On Saturday with the PumpFun Pump Token, which has been a bit of a roller coaster. We listed it. It was interesting because they did. I'm not sure how much you followed the process behind this, Austin, but like they did it as an ICO, so it's like an actual token sale where they wanted to raise $600 million. They were hosting some of the token sale themselves on chain, and then they had us, Kraken, Gate, Mexi, and maybe like one or two other centralized exchanges, Bybit, and one other, I think, but that were doing the remainder of like the token sale, and there was like a much smaller allocation given to all the centralized exchanges. But it was a bit of a chaotic sale because, what they were doing is they were offering a fixed price of 0.001 $0.004, so 0.4 of a cent. And that put the PumpFun, or the Pump token, at a 4 billion fully diluted valuation. The whole 600 million allocation sold out in just 12 minutes. It
Oh my
was
God.
crazy.
Wow.
Third largest ICO in history. If you remember all the way back to 2018 with EOS doing that $4.1 billion ICO. Where's EOS now? I'm not sure. And then I think Ton was the second. There was also, at the end of ICO mania with Telegram doing that huge $1.7 billion ICO. I get the feeling this Pump ICO could, like, if they wanted to raise way more, double, triple this, easy. There was so much demand. But
Yeah.
450 million of it all went on chain, actually. So it was a big sale.
Yeah, I mean, a $600 million sale in 12 minutes, like that's not just demand, right? That's a retail behavior pattern that we haven't seen since the ICO craziness. I mean, it
maybe
feels like
NFTs.
So long. Yeah.
Yeah,
But I
like
think that the
NFTs,
difference
ICOs.
now, the difference now, Matt, is like they're not just selling vaporware. It's this isn't Pump already had like $700 million plus in revenue, right? This is like a monetized meme engine.
Here is an unbelievable stat, right? And I think it's always fun to talk about PumpFun because people dismiss it as like, it's like a meme launch pad, like it's not good. Like they talk about how like the team's extractive, blah 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 blah. Let's just put that to one side. PumpFun is the fastest company in the history of any company ever, to reach 700 million in revenue.
It's incredible.
That's unbelievable. If someone told me that and I didn't know it like today, I'd be like, no, that's not true. They are insanely profitable. They're like 2 billion in cash that they're just sitting on. It's and I mean, they've made now, since their launch in, by the way, 2014.
Yeah.
They're at around 800 million in revenue. It's an insanely profitable business. And when you look at PumpFun in general, for pretty much up until this past month, they've been accountable for 90-ish% of all tokens created on Solana. All tokens.
Yeah, wow.
That's crazy. And we've just seen, actually, in the past month or so, Bonk Fun. So from the Bonk community, they launched a launch pad, and pretty remarkably has gained close to 50% market share now of the token launch pad. Now, we're not in like peak meme season, but it started picking up. But I think the thing that's really driving some of this, of course, like the Bonk community's huge meme coin came out of the ashes of FTX and is really was like the second wave of memes that was really created by Bonk, post Doge and co. But the plan that Pump have made, which I do think is probably quite concerning for Solana, is they are going to move away from Solana. They're going to launch their own chain, which no doubt they want to own end-to-end, all of that, the sequencer fees and everything in and around it, right? So that they can maximize profit. Because at the end of the day, I guess if you're Pump, you already were accounting for like 90% of token creation. People were coming to you versus necessarily Solana. Okay, there's liquidity and stuff there, et cetera, but I think they'll probably be pretty successful in doing this. But you got to wonder what that means for Solana, actually. Assuming Bonk Fun can't fully take its place, which, no offense to Bonk Fun, I don't know if it will, or whether this is a temporary kind of like bit of market share grab, but we'll see. But the price action on Pump has been very interesting, and this is why I thought it's worth just a quick chat, because like where's the chart here? Let's just find this. Here we go. I'll share my screen. So if we look here, let's just take the weekly, because it was sold at a 0.004 price. It debuted and it was non-transferable until Monday, when it then became transferable. You could withdraw from exchanges, you could trade it, etc. And it debuted at 0.0054. So all of the ICO participants are in the green. But it kind of had a little bit of a rally up to 6. And then kind of settled down. And then you see this massive surge. Well, it went all the way up to 0.0068. And this was because the Pump team were doing huge amounts of structured buybacks. I think it was somewhere in the region of so the 16th was yesterday, right? Wednesday. But I think it was late on Tuesday. They did something like $30 million worth of token buybacks. And, bear in mind the amount of cash they're sitting on.
Yeah.
Revenue.
$2 billion.
Exactly,
incredible.
Right? And I was pretty sure that they were going to do this, with probably a way of accruing value to the token, right? Takes a portion of protocol revenue and use it to buy back tokens, etc. But what's been kind of interesting, I was writing up some notes to talk about this last night, and then today it's just flatlined out. That tells me people are just selling into these buybacks. Will they keep doing them so close to the ICO? I'm unsure. I don't think it's particularly capital efficient, but I think they really want to have a good launch. I think that's why they're kind of doing it. But we're sitting back at pretty much around the price that it debuted on chain with. So I do think when you consider that they're making this much revenue, and this is at a $5.4 billion FDV, there are lots of protocols out there that are making way less, despite what you may think of PumpFun. Lots of tokens with a much higher valuation that are making way less revenue, have a far less sustainable business model. I think I would not be surprised if this starts kind of taking off in the coming weeks, months ahead, especially if we end up in a big meme season, which I still think later on this year we're going to see. Yeah. But I thought we'd cover that at least.
It's a meme casino for sure, but the question has always been, is it durable? And I think that the move to their own chain signals a lot of seriousness. I mean, if they execute well, they might be the first real native layer 1 built not for DeFi or NFTs, but for virality. And, that's not a side project. That's a power move. So I agree with you. I think the big question here is what does this do to Solana? But then at the same time, you kind of you do have to take a look at what's happening with PumpFun. I agree that it's maybe not as sticky as PumpFun, but you can't ignore the fact that they were 90% of Solana's token launches, and then now they're down to 40% as PumpFun is rising, and that tells you the moat maybe isn't necessarily wide; it's just early, And so yes, this may be a tech war. And I think that they're recognizing that with the move to their own chain, but it's also obviously just a cultural product war as well. It's easy to laugh at meme coins until you realize that they're generating more revenue than half of the layer 1s in the market. I mean, there's a lot of money being thrown around here. So,
it's interesting when you hear the PumpFun team as well, the way they talk about kind of growth. I think your point on the moat is also really important, because there's a lot of psychological moats that exist in crypto. I've heard this so many times where it'd be this DEX has a huge moat around it. And it's like, well, until the next decentralized exchange comes around and pulls volume from it, and then all of a sudden you realize, like you say, they were just early, they were first.
Mm-hmm.
There's not like this real ingrained, entrenched like stickiness or huge leaving cost to some of this, and we're not quite mature enough where it's just like people have built patterns that they just like this stuff. So and everything, you know, being open source, easy to fork, create, run, a little bit more efficient. I think it's most moats in crypto are largely overstated. I think is like my take, which it sounds like you agree with. The the other piece that I think is interesting when the PumpFun team talk about the future of what they're doing, it's far less about just like memes, and I think they almost view themselves as like the next era of like social networks on chain, and having like creators come on, and this like evolving into a much richer social experience. And whether you like it or not doesn't really matter. There's no denying that what PumpFun created was a very compelling social experience, right? I'm pretty
100%.
sure a lot of the people trading on that, yeah, people want to make money, but it was about being a part of that kind of social experience. It's like when they had like all of the video stuff launched and all this other stuff, you know, there's loads of bad stuff that comes with that. But to to minimize it to like just thinking, hey, these guys just make memes is a massive overlook, I think.
Yeah. This is what I'm talking about with a cultural product war. You know, I mean, something that struck me was months ago, I'm listening to a comedy podcast with, you know, it's a bunch of dumb comedians. And one of them is talking about how, or at least that's how they describe themselves. I think you actually have to be fairly smart to be a comedian. But nevertheless, one of them was talking about how, you know, he went on Pump Fun and created a meme coin for a joke that he was telling on stage that ended up going viral. And then this meme coin, you know, ended up having like a total market cap of, I don't know, 10 or $15 million, some like, you know, big amount of money in a couple hours. And he owns like the majority of it. And he was talking about, you know, it was so bizarre because all of my friends were texting me and saying, just like dump that. And he's like, yeah, but the people that bought this are my fans.
Right.
So like
And
I can't dump my
it's exactly. And I think that's been one of the challenges, I think, for creators in the like crypto and meme space is you're monetizing the attention economy in many respects, right? And you're giving a way to put a hard value on the quality of the attention that you've driven, but in a way that's very different from like passive streaming revenue. It's like active participation and the financialization of all of that. And yeah, like you say, dumping the coin on all of the people that have bought into this may not be the best look, which we've seen time and time again. What I think we're going to start to see with some of these platforms is, or what I hope to see, is a bit of a maturation of these models where it's less a zero sum game of just basically dumping on other people to make a financial gain, and getting some better economic models which enable people to participate, see upside, and have like an incredible social experience without getting absolutely fucking wrecked. Because that is, when you look at the stats on the percentage of people that actually make money off PumpFun, it's like in the single digits. Yeah.
It's a casino right now.
It absolutely is. And for some people, like, they go in there knowing exactly that that's the case. For others, they don't, and that's when you kind of have challenges. Speaking of casino, the House has been voting on some crypto bills. Why don't we why don't we dive in and just give like a brief summary of what's been happening in crypto week? So there's 3 bills that have been voted on that Trump has been talking a lot about. Should we give like a little bit of a run through of these 3 to kick things off?
Yeah, so there's 3 bills. There's the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act. That one sounds good. Okay. All right. So I love it how they put so much effort into naming these bills. The Genius Act is the Guiding and Establishing National Innovation for U.S. Stablecoins Act. And what this does is it establishes a regulatory framework for stablecoins that requires full backing by liquid assets, monthly disclosures, audits, and some federal state oversight. It's, interestingly, this is the type of thing that we've been asking for a long time, I think. And so this was introduced in the Senate by Senator Bill Hagerty, a Republican from Tennessee, back on May 21st. And it passed the Senate 68-30 on June 17th, so exactly a month ago. And then the House planned to vote during Crypto Week, as it's being called, but they stalled a couple days ago after the procedural votes failed. So this includes an ethics provision barring Congress members and families from profiting from stablecoin related legislation.
Asterisk.
Notably, it doesn't apply to the president. Yeah. And so I think that that's an interesting aspect of the Genius Act. And then at the same time, the Clarity Act has been going through, and this is the Digital Asset Market Clarity Act. And basically, what this does is it clarifies whether digital assets are commodities, which would be the CFTC in charge of that, or securities, which would be the SEC's responsibility. And it requires CFTC oversight of crypto markets. It mandates registration of intermediaries. It aims for some regulatory certainty, which, as we have talked about for years now, Matt, it's not that the crypto space doesn't want regulation. I think, for the most part, it's that we want clarity in regulation. And so there we have it, the Clarity Act. This was developed by the House Financial Services and Ag Committees and placed into the Crypto Week lineup. And then we have the Anti-CBDC Surveillance Act, but that one kind of came out of the debates around the Genius Act and the Clarity Act, right? So
yeah. Well, yeah. So I think this is where things got a little strange. So we were expecting, because of how this had been billed by Trump himself, Crypto Week, major legislation passing, that, these things were going to fly through. In particular, you look at the price action on the likes of Circle stock, which we've been talking about. And if you haven't been following this, let's just find this and share screen so we can just show you. I'm just gonna use good old Google. It's been a while. Right, and we're up 55% in the past month.
Beautiful.
178 or 179% since their listing, which is absolutely insane. We're at a $50 billion market cap. That's pretty much half the market cap of Coinbase, even though they do a fraction of the revenue. And why is all of this happening? Well, it's stablecoin summer, baby. That's what's happening. And the absolute frenzy around stablecoins and how profitable they are. Fun fact: when you look at the companies in the world with the highest revenue per employee, Tether is number one by a country mile. So Tether let's just remind myself how much money Tether made. They made in the first half of, was this 2024? Oh yeah, that was 5.2. So they hit $13 billion in profit in 2024. How many employees do you think Tether has across their like whole global operations? If you had to guess.
I mean, if you were to just guess surface level, you would probably say it's in the high hundreds, low thousands.
100 people.
Wow.
It's Tether makes more money than some of the major US banks that have tens of thousands of employees.
Yeah.
It's unbelievable. So obviously, people are looking at that and saying, I'd like some of that, please. Which is why everyone is launching stablecoins. And there's a huge amount of buzz around stablecoins. And why do I talk about all this? Well, these acts are coming in to further cement the growth for that. And that's where we've started to see a lot of volatility in, for example, the Circle stock price through this week, as there's been a load of ups and downs in this vote. So here's how things played out. We went into the initial vote on Tuesday of this week. All three bills failed to secure enough votes in favor to pass, which was a very big surprise outcome. And the main surprise here is that 13 Republicans voted no. I mean, the Republicans kind of control the House majority here. So why did this happen? The holdup, as you were alluding to, Austin, is around the CBDC side of things. So there was a concern that relates to the Genius Act being passed, where the dissenting Republicans wanted some last-minute additions, and this was largely around the CBDCs and having a ban on government-sponsored digital currencies to be added to the Genius bill. Those stipulations are included in the Clarity Act, but that's yet to pass the Senate. So there was concerns that they would pass the Genius Act, and then it'd be like, oh, is this going to open up the door for CBDCs? So Trump called a meeting Tuesday night, brought in the 13 Republicans. I imagine that was a very enjoyable meeting for everyone involved, to convince them, let's say, to vote otherwise. There was a new vote that took place yesterday that was hitting a bit of a stalemate, and eventually, late in the evening, the Genius and the Clarity Acts were passed, 2017, 2012, and several of those Republicans that initially voted no flipped to a yes vote. And the thing that convinced them was that the anti-CBDC bill will now be tied to the National Defense Authorization Act, which is a must-pass bill on that both chambers of Congress, the House and the Senate, vote on every single year. But what importantly it also means is that there were no amendments to the Genius Act or the Clarity Act to
cause a revote, basically, right?
Exactly, and it would have to go back to the Senate and things like this. So it doesn't have to do that now. What I thought was crazy alongside this is the House actually set a new record for the longest vote in the history of the chamber, with the Wednesday night vote lasting more than 7 hours to get passed.
Unbelievable.
I know. I'm sure everyone was very happy that was in that room that wanted to probably get out and get home. But it's all passed now. I think that there's going to be more happening. So the Clarity Act is going through. So the Genius Act is passed. The Clarity Act is going to kind of go through the final passage today, if it hasn't already. It probably hasn't already, actually. So we'll see some final pieces tacked on, and I think that's going to help. I think a lot of people that were banking on this legislation pass breathe a bit of a sigh of relief. and
Yeah.
certainly helped Trump keep face in this respect.
Yeah, I think it's difficult to overstate the importance of this legislation. It deserves to be called Crypto Week, like it's a freaking music festival or something
Yeah.
like that.
Or a pantomime,
Because
depends the way you're looking at it.
yeah, exactly. I think the this has the potential, if these bills become law, to make the US become the most investable regulatory climate in crypto, especially for stablecoins, as we're already seeing that action, but also for mining infrastructure, for compliant exchanges. The list goes on. If this bill package fully passes, the US goes from being hostile to dominant in crypto overnight. And really, if you think about it, the House just passed the most consequential crypto legislation in US history, I think, after the longest vote in the history of the chamber. This is really
going to be this time last year. It's
not at all. I mean, you think about how much of a shift this is. The left has focused on regulation through enforcement, as we've talked about so many times over and over again. As we spoke about, like, all of these major players in the crypto space, speaking like very, very openly to Gary Gensler and to the SEC at the time, and saying, look, it's not that we don't want regulation. It's that we just want clarity. We want to know what the rules are, and we want to abide by them. And that clarity never really came. Yeah, they were stuck in a holding pattern, and I think that this approach that the Biden administration and the left more broadly has been taking with, like, regulation through enforcement and these fear-based narratives, it's Trump definitely poked a hole in that with his campaigning. When he was, we'll never forget, on the first day in office, I will fire Gary Gensler from the SEC and everything like that. These bold claims, and it went over very well. I think a lot better than he expected. And so, you juxtapose that with how the right is owning the pro-crypto lane, property rights, innovation, freedom from central control. And that's a massive political wedge. Forget SEC lawsuits and woke capital, as they call it. I think that the GOP just gave crypto its first real legislative win here. So that's a big one. And actually, I think that the CBDCs are like a not to be missed critical aspect of this. CBDCs, we've covered these a lot in the past. We actually had a 2-part episode last September just talking about CBDCs from a pretty balanced perspective. If I say so myself. Like, there obviously are some legitimate benefits to CBDCs, but we also covered and went pretty in depth on the concerns about CBDCs, not just if you're somebody that believes in the principles of crypto, but really if you're somebody that believes in freedom and privacy and individual sovereignty as a concept. And so CBDCs have been a very contentious thing in the United States and really throughout the world. But in some ways, I think that now the US is kind of leading the charge on how a people may systematically push back against CBDCs. And I view this as being a win for financial privacy. The anti-CBDC bill getting tied to the defense budget, that's not just something that's symbolic. It actually anchors it to national security, which reframes surveillance as a geopolitical risk. CBDCs aren't just a policy debate anymore. They're officially a national defense issue now, which I think actually they should be. So
I completely agree. I mean, my stance on CBDCs. We feel very, very similar. I think it's a wolf in sheep's clothing in many respects. And I don't think you have to be a staunch libertarian to even remotely feel that way, which I am not. So I agree with you. I think it is a monetary tool that it has far-reaching consequences outside of that when it comes to the personal, not just financial, but financial freedoms of people around the world. Um,
Mm-hmm.
I mean, the other thing here, we're talking about the shift and some of the things that Trump has done since he's came in, for better or for worse, right? Gensler being out, I think pretty much not just the crypto space is pretty happy about that. Well, this week we also have had a lot of discussion around our favorite man, Jay Powell, and
Mm-hmm.
whether. Well, actually, I was about to say allegedly, but no, it has actually been confirmed by Trump himself that he had a conversation. I think with the same group of Republicans that where they were discussing the crypto week bills, if I remember correctly, but discussing the potential to fire or remove Jay Powell from his seat, leading the Fed. And since come out after markets got really jumpy after that to say, look, it's not going to happen. I don't know if you noticed, right? He was like, unless some fraud comes out. I was like, okay, here. I think you might know something here, Donald, that you're not saying out loud here. But this is one area where my take here is I do not want to see Jay Powell removed from his seat.
Yeah.
I think we need stability. If that means rate cuts are a little bit slower than everyone would quite like, I think that's not necessarily a bad thing. Inflation's looking really solid. It feels like we're almost certainly going to get a rate cut, barring some very unexpected data in the next couple of months in September, at least. So, yeah, I think the market jitters are sitting around whoever goes in, if Jay Powell comes out, is not going to be someone that stands up against the government. And this is important that they do because they should have independence. Fiscal and monetary policy should be separate, not one and the same.
Yeah.
So
we're so on the same page here. I mean, we have gone through many cycles of criticizing Jay Powell, and then I think more recently, and maybe even for the last couple of years, honestly, I've personally felt pretty good about the job that he's done. Are there things that could have been done better? Of course, but I think that he has actually maintained some independence, which is not, even though it's an expectation, in practice, it's not really a given for the chair of the Fed to do that. So let me see if I can.
As well, it is a thankless job. I mean, it was. I think everyone agrees. I doubt the Fed would disagree with this. They were late to raise interest rates, right? We were talking about the transitory phase, and
they were too late.
It was sticky. They were too late. I think the way they've managed it since has actually been pretty good.
They've stuck to their guns.
Yeah, they have. They've had conviction. They've settled markets
during an election too. Yes. I mean, if you're gonna see caving from the Fed, like, it's going to be during an election, especially a contentious election. We said
at the start of last year that we were like, Jay Powell's going to
he's going to crack.
And he didn't. Sure, maybe that 50 basis point rate cut, you could argue, is maybe a little bit premature and aggressive, but I don't think it was influenced by politics is the important piece. I think they were trying to make a call and get it right, but if that's the worst he's done, you're not going to get everything right, especially when you're working through this kind of data with such a lag.
Yeah, it's true. All right, so here we are, Matt. We're agreeing on everything. You're agreeing on CBDCs. We're agreeing on Jay Powell. Let me see if I can find something we disagree on, or something I can piss you off with. I want to talk about the art of the deal. I can hear the shrieks right now, but look, this was something else. Okay, Trump kind of came into a difficult position here, where he had 13 Republicans that were dissenting on some really critical bills here, and their dissent was going to jeopardize the entire thing. Like not just in terms of their votes, but in terms of the compromise that would that they were asking for, that would like cause a revote, and then that would probably create issues in the Senate and all kinds of things like that.
In a flagship set of legislation that Trump has like really made a big deal of as well. It would be quite the embarrassment.
Yeah. And, he came in and look, he didn't just make a bunch of noise. He flipped the House. And I think that that's a big deal. The GOP is finally aligning around some clear crypto narratives here, which place private innovation over centralized surveillance. And he called those 13 Republicans into a room. He flipped them. Say what you want. He delivered for crypto. And I think that this week we saw maybe the clearest political dividing line in crypto yet, which is freedom versus surveillance. And Trump picked a side there. And I think that he picked the right side. It's something that's going to play well across the political divide, even if it doesn't, always entirely look like that's the case in the political media circus.
If there's one thing I will agree with, right, around, actually, if we even zoom out from this, let's go into something even more contentious, right? Like, which we're not going to talk at length of, but like Trump's tariff strategy and negotiation. I think it is easy, and I was definitely one of these people around the April period that was left to say there is literally no method to this madness. It is chaos. There is no real plan. And while I think there is a lot of chaos and there could be a lot less chaos, I kind of look back and I'm kind of looking at where we are now. Has Trump got what he wanted? Yeah, I think actually he has across all of this. And the markets have shrugged it off. We've talked a lot about like the taco trade, right? Of like Trump always chickens out, but does he? I think a lot of the time, Trump, what he has done a very good job of is he tests the sentiment of the market. I think this Jay Powell thing is a perfect example. Nobody leaked that that was in the room. It was obviously thrown out there so Trump could gauge what the market thought. The market didn't like it. Trump came out. He's like, nah, I don't think we're going to do it. Right? It's the same with tariffs. He's threatens, creates delays, gauges the market. One thing that's happened is, the dollar has got much weaker. I think the main thing that's probably top of his mind that he just hasn't been able to get his way on is getting the
national debt under control. Yeah.
Which down, right? So
exactly,
which is a big part, and that is why he's pushing rate cut.
Exactly.
The moment
we need to refinance the debt.
Come down. Exactly. Yeah. So, this is his last thing, and he is going to get his own way. This is a very different term from his last term. He has so much more control, much more support, and I think he's just got a lot more confidence as well in like being able to navigate the more geopolitics. And then every kind of now and then chaos breaks out. But I think that kind of adds to his the concern, because I think people don't want to call his bluff because he will, cut off his nose to spite his face. But the US is in such a strong position that he can do that. And I think this is what we've seen. But you look at where things are trending towards now, you have to say, like, Trump's got a pretty good deal across the board. Most of the other countries are caving to it. Now, how sustainable is this long term?
Yes.
I'm not sure, but we'll see. And yeah, there is a lot of contradiction when we talk about reducing the deficit, but then simultaneously the budget that was signed in and that can potentially increase debt. So there's a lot of like conflicting pieces, but I will concede to the fact that he definitely has a plan. And I don't think all of this is just complete chaos. And he's been very effective at what he's tried to achieve. Whether you feel good about it or not, he's been very effective at what he's tried to achieve. He's accomplished a lot.
I can't believe it, but I couldn't get you to disagree with me.
I know. We'll find something. Else.
Yeah.
All right, we better wrap this up. We've dug into quite a few things. We'll be back next week again. We'll be streaming live on X. We'll probably stream onto YouTube next week as well and get that. But
Oh
of
wow,
course, you'll be able to
let's
get
do it.
we'll get the full recording. You can listen on Spotify, Apple, wherever you get podcasts as well. But as always, Austin, it's been a pleasure, and I'll see you next week.
See you then, Matt.